Good evening. Welcome to The Big Question on NDTV Profit. I'm Vikram Oza, and tonight we're asking a question that actually sits at the crossroads of oil, geopolitics, and great power rivalry. So Iran, Venezuela, and oil. Is China the real target, is the question. And here we are connecting the dots to explain this up front. Oil markets are back on edge. Brent has jumped more than 6%, and this has happened over the last two sessions. It's trading above $63 a barrel. The immediate trigger for this is Iran, where escalating protests, a sweeping crackdown, and this sharp rhetoric between Tehran and Washington, all of these factors once again putting supply risk on the table. And President Donald Trump is saying that the US is looking very seriously, in his words, looking very seriously at Iran, that the military is involved, and that, again in his words, very strong options are being considered. So that's strong rhetoric coming in. In response, Iran has warned that any attack would make US bases, ships, Israeli interests, all of them will become legitimate targets. And now you see the rhetoric rising. So the Strait of Hormuz, which is the world's most critical oil choke point, suddenly is coming back into the equation. It's right at the center. And here's why this matters. Because Iran produces about 3.5% of the world's crude. It holds the third largest oil reserves globally. It sits astride the Hormuz Strait. And that's where nearly a fifth of global oil flows. So Iran oil is already under American sanctions. India, of course, stopped buying it years ago. But China did not. In fact, nearly 80 to 90% of Iran's oil exports go to China. And they go quietly, cheaply, and they go through these shadow fleets, through opaque shipping. There are discounted deals there. And this is where, besides Iran, Venezuela enters the picture. Venezuela may account for just 1% of global oil production, but it holds the largest oil reserves in the world. Years of sanctions, there has been mismanagement, there has been underinvestment. All of these have crushed its output from more than 3 million barrels a day, which was the case decades ago. Now it's gone under 1 million barrels today. Yet for China, Venezuelan oil mattered, and mattered a lot. Beijing invested billions. In fact, it loaned money that was repaid in oil by Venezuela, and Chinese state firms have held claims on billions of barrels underground. Now look at what's happened. That American pressure has intensified, and Venezuelan crude is being redirected. Energy infrastructure is being reset, and Chinese refiners that relied on cheap Venezuelan barrels, now they are scrambling. So step back. Iran and Venezuela, they're not random. They are two sanctioned oil producers that have kept China's energy costs low at a time when Beijing is the world's largest crude importer. You disrupt them and you disrupt China's economic cushion, which is why analysts are asking, is this really about Iran's protests? And that is the big question right now, because yes, you are seeing these protests in Iran, but is it about that, why we are seeing this kind of reaction in the oil markets? Or is it because of the larger question of China getting squeezed when it comes to their energy security? And what are the larger implications when it comes to the prices of oil, when it comes to the implications for India as well, and the larger geopolitical picture? The world order is changing and very rapidly. So that's why we're asking the all-important question, Iran, Venezuela, and oil. Is China the real target? And we're taking it across to our great panel that's joining us tonight. We have Ajay Bagga, market expert, joining us on the show. Sukrit Vijayakar is also with us, global crude expert and founder of Trifecta Consultants. Along with them, we have from Hong Kong, Richard Harris is joining us. He's Chief Executive, Port Shelter Investment Management. And with them, Rabinder Sachdev, Foreign Affairs expert and founder of Imagine India Institute. Great to have you all with us. Let me begin by asking you, Ajay, because Brent has jumped, like I was starting to tell our viewers. We've seen it jump more than 6% in just two sessions. Now the question is, these markets, are they really pricing Iran unrest as the real factor for this kind of move? Or are they sensing a bigger strategic play where oil is being used as leverage against China by the US?
Well, I think it's the former. The potential for conflict with Iran leading to Strait of Hormuz getting shut. It's not happened last year, but if you remember, in the 12 days of bombing that Israel and the US carried out, there was a huge spike, and the oil tankers coming out of the Gulf got priced quite a lot higher. So it's more the issue with the evacuation of oil from the Gulf. We must notice, however, that the Saudis have a huge pipeline which opens into the Red Sea, so they can skirt about 5 million barrels a day. They can evacuate out without having to go through the shipping lane. And UAE also has now set a pipeline into the Gulf of Oman. So some amount of work has happened, but Iraq and Kuwait don't have an outlet. They have to go through the strait and then the Iranian oil. So overall, Vikram, it's a worst case scenario of the Iranian regime going and sinking some tankers in the Gulf. That is brought in a risk premium. China targeting, yes, on a strategic basis, you can say that because Venezuela and Iran have happened quite together. Iran is still to happen. It's still in speculation, but looks like some action might be imminent. Overall, if you see, China is dependent on that. Out of its 11 and a half million barrels a day, they were taking 2 from Iranians and about zero point 0.5 to 1 from the Venezuelans. So China is dependent on these two supplies, but it has alternatives, especially the Russians sitting on its northern border. So it's not that China will starve. And they have built a strategic reserve of 1.4 billion barrels now, 1.4 billion. So nearly 280 days of consumption is sitting in the strategic reserves of China.
Right. So, Sukrit Vijayakar, do you concur with what you're hearing from Ajay Bagga? Iran, of course, is only 3.5% of global supply, yet these prices are reacting sharply. What does that tell you? Is it less about barrels and more about who those barrels are meant for, primarily China?
As far as Iran goes, it's not going to affect China too much. See, one thing you need to understand, over the last 20 years or so that I've been trading oil, I have never seen, whenever I wanted some barrels of oil for any refinery, I always found it. Okay, it is not that oil is in desperately short supply. So these are specs building up prices ahead of the market. Okay, we need to remember that there is no genuine shortage of oil, but the speculators in the market simply rush prices to where they believe it would go. In terms of, do you want me to talk about Venezuela now, or you will come there later?
No, I'll come to Venezuela as well. But while you're talking about the kind of reliance that China has on Iran, I'm just wondering, because of the Hormuz Strait as well, that kind of pressure, the choke line, how much of that impact are you likely to see? Because there is a lot that I'm hearing about China's shadow energy lifelines. Is that going to get compressed with the kind of moves that America is making right now?
No, so China will be taking in how much? 1 million barrels of oil per day from Iran? Not really. It's one VLCC. It's not even one VLCC. It can be easily substituted by other crude. So I don't see
Even
that as a
even the kind of shadow trade that happens? Are you incorporating that?
No. So what will happen if you can't do the shadow trade? You'll go and buy in the open market. The oil is available, so China is not going to be short for oil.
Much price difference.
Price difference. So products in China will become a bit more expensive. The refining margins will drop a bit.
Right.
But what is going to happen to products? Are we going to be short of petrol? Are we going to be short of diesel? I don't see that happening.
So energy security is not the question. It's just about the economics of it, is what you're saying. Richard Harris,
yes.
From Hong Kong, how is this being read in China? Does Beijing see American pressure on Iran and Venezuela as a direct threat to its energy security model?
No, not at all. I think the previous speakers have got it right, which is that these volumes are fairly small. Oil is easy to come to. China can get oil on the open market as easily as the US or Europe, anybody else. So that's not really an issue. Yes, there may be a bit of an issue with the Strait of Hormuz, but don't forget that the Iranians earn a great deal of foreign exchange through their oil exports. So are they really going to kill that golden goose? Probably not. Even in the last throes of a regime change, that's probably unlikely to happen. No, I think if anything, China is really just just an onlooker to all of the events happening in Venezuela and Iran. And we actually also have to think of how influential are the Americans? Yes, they can maybe attack some strategic areas. They can maybe take the head off, as they have done with Maduro in Venezuela. But does that really change the picture overall? It seems unlikely. So I think any impact on China is negligible.
Ravinder Sachdev, is it fair to argue then that Venezuela was phase one? Because all your co-panelists disagree right now. I'm wondering if Iran could be phase two after Venezuela, and if the real objective is to dismantle China's access to what used to be discounted, sanctioned oil.
Then, sir, the phase three is Russia. That's what will start to pinch China.
Right.
I mean, the 500% tariff, the Lindsey Graham resolution bill introduced in the Senate, going down to the House, in good likelihood, it would come to Trump's table in the next 10 to 15 days. Now, it's up to Trump, and he's asking that flexibility as to on which countries could he impose those tariffs. Okay, India, Brazil, China, and what percentage? The bill says minimum 500%. So if Trump decides one fine morning 500% on China, if he decides, let's say, for buying Russian oil, then the third leg of this, oil discount denial, let's put it that way, strategy of America will have some more punch. Now, as far as, Venezuela is concerned and Iran is concerned, if you see, I mean, in all of them, the primary and there's a secondary spillover benefit, if we were to call it even that. In all of them, the spillover benefit is that discounted oil to China is being reduced or cut off. In Venezuela, the primary target is, sure, cutting off the drugs and fentanyl, but ensuring that the Western Hemisphere is a colony, or Venezuela is a colony with a remote viceroy, Marco Rubio, sitting in the US. So that's Venezuela primary, right? Sure, America gets Venezuelan oil, but then let's say a tertiary is China gets starved of the discounts. Similarly with Iran, the primary factor is Israel and Middle East, that Israel and Iran see each other as mortal enemies, and that equation has to be solved, right? Sure, along with it, the fact is that Iran sits on oil and its, discounted oil is flowing to China. Similarly with Russia, the game there is the Ukraine war, right? But in order to, switch off the, the tap for Putin's oil revenues, that 500% tariff bill. So in each case, let's say there are regional or geopolitical considerations, but there is a common underlying figure that we can extract definitely, depriving China of discounted oil. To my understanding, of course, the oil experts would know much better. I think around 40% of the oil that China is importing today is discounted of versions, of which around 20% or 15% is Russian, and the balance 5-7% maybe Venezuelan, 10-11% maybe Iranian. So if we were to kind of club them all together, so probably maybe 30 to 40 or 30 to 35% of Chinese oil is discounted. What America is doing through this, earlier it used to be, and it still is, to contain China, but as I think all my esteemed colleagues have mentioned, America is creating friction in China's rise, right, by making it go out and buy in the open markets at higher prices.
Right. So if that is going to be the scenario, if this is phase three is something about Russia that actually America is angling for, do you see it coming? Sukrit Vijayakar, the kind of reliance that China has had on discounted oil right now, even if you were to take that out of the equation and you're saying, okay, it's going to be replaced with market-priced oil. When you talk about the squeeze on Russia, how much of that is going to affect the oil market, you think, and the prices?
But China is, what will they do? They will apply 500% tariff on oil. China will retaliate with 500 or 1000% tariff on rare earths. China controls around 90% of the rare earth supply in the world. You think Trump is going to say, I will very seriously consider military action against China? So it's difficult. That is what Venezuela contributes to the US more than oil. It has some sources of rare earth, which China is controlling. Now, China has already made a statement that irrespective of whoever controls the US, Venezuela will have to maintain its international agreements. And there you have it. I mean, what is the US going to do? The US has been saying that, excuse me, the US has been inviting people to invest in China, in Venezuela. Exxon refused, saying that there is no legal framework to do anything.
Right.
And then Trump responds by saying, I will not allow you to invest in Venezuela. Like, yes, I wanted to. So this whole thing, the rhetoric is a bit confusing, but it seems to be more rare earth oriented than oil.
Ajay, do you find the rhetoric confusing? I'm kind of asking because from this point, whenever we've talked about Mr. Trump, the rhetoric has been high in terms of the pitch, in terms of its aggression. But specifically, when you talk about Iran and Venezuela, is there a change? Are you seeing this kind of change? If China, of course, right now is forced to replace that cheap Iranian and Venezuelan crude with market-priced oil, and we're finding the rhetoric increasingly from Mr. Trump's side, which is talking about being more and more in control of Venezuelan oil. And he says, I'm going to decide the price and all of that. In fact, he's gone on to say on a Truth Social post that he considers himself the de facto president of Venezuela. With that kind of rhetoric, with that kind of language, where do you think this is going to structurally alter global demand dynamics? And by extension, if you're talking about price risks for importing countries like India, where would you peg that?
It won't to a large extent because Venezuela was out of the formal market. So it will not have much of an impact. Mexican oil going to Cuba will stop. So you will have some more oil available. All these economies will have to fall in line with Trump. So Trump in the Western Hemisphere is different from Trump in the European sphere of influence. Is different from Trump in Asia. That is the difference we have to see geopolitically and geoeconomically. In Western Hemisphere, Vikram, he will be having the maximum impact because he has got boots on the ground. He's got firepower overhead. Iran is a very entrenched and a very ruthless regime. It is not going away. No matter how much the protests, no matter whatever the US and Israel, we've seen that last year as well. Maybe they will not progress towards the nuclear weapon stage, but they're not going away. They have too strong and too strong a military. Venezuela was different. I think it was a palace coup where Maduro was sold out by some insiders and they could go in and come out fast. But if you look at it now, they're not trying to change the regime. They are negotiating with the successors of Maduro who are again not having any legitimacy. So it's not a fight for democracy, it's fight for minerals that's happening. And it's the Monroe doctrine back to 1823, Monroe doctrine, that this is my sphere of influence, the rest of the world stays out of it. Europe, he's not been able to do much, and he's alienating the Europeans, alienating traditional allies of the 1930s and 40s, and questioning the NATO itself. So that's a difference. And Putin is not playing ball. He tried to give Putin a lot of concessions that we will develop this, we will develop that, and I'll give you these resources. Putin is not interested because he's into Mother Russia's greatness again. He wants to build the Soviet Union again. Asia, China sees it as its backyard. So China is not backing out of Asia in a rush. They're not ready right now to fight a Taiwan war. So they're preparing for it. Another 2 years, You might have something, might not have it. It depends on the leadership at that time. But definitely right now they can't sustain a Taiwan takeover militarily. So they're looking at other things, and there they have won very handsomely. They are the factory of the world. They are controlling the commodity trade. Now they're controlling the silver trade. So I think you have to see it in that way. Now, where does oil play? Oil is essential, but the oil intensity in the GDPs is reducing. Second, the oil availability is high. So it is an oversupplied oil market. You have alternatives available, and there is, especially in transportation, the oil intensity will reduce, especially in large economies like China with the electrification that's happening.
Right.
So we must keep all that in mind. And what does Trump want? Final point. Trump wants a sub $2 at the pump, $2 per gallon petrol for his elections. So Trump is in favor of lower oil prices. So it will be an oversupplied market, Vikram, by that logic.
Richard, do you agree with this, that the actual game, as far as Mr. Trump is concerned, is about bringing those oil prices down domestically? The larger play is about control over minerals, and that's why Greenland also, besides Iran and Venezuela, are going to hold strategic importance. What is the end game, according to you, from the American side? What is at play right now, and how do you see them trying to achieve the goals that they've set out under the second Trump administration?
Well, there is no end game and there are no goals. What we're seeing is policy being made on the hoof by Trump writing often late at night on Truth Social, and he leaves the people under him to run after and clear up the mess. I mean, when Marco Rubio was questioned about why they kidnapped Maduro and released the former president of Honduras on similar charges, he basically said, well, I'm not in charge of the pardons. I have to rely on the president. You know, everything is going up to him at the moment. So there is no joined up policy. There is no focus on goals. There's just short-term desires to do something. Now, Venezuela was something that obviously Trump is irritated about, and we've led to this. So what we're seeing is a lot of issues that are being tidied up after the event. He throws out threats about Greenland, which is a very, very serious issue in terms of world peace in general. He throws out threats about Iran. He can't overthrow the government in Iran. He may be able to help it, but all he can do is launch some long-range attacks against Iran. He's not going to put boots on the ground. The Republicans don't want that. And I think as investors, we're in a difficult position that we are unable to see where the next move is coming from. We're unable to see maybe some of the unintended consequences that come from the moves that we don't really know about. And that's what makes it so difficult. So it's quite easy to say, oh, well, China's going to be impacted by these oil prices. They're not. It's just that all of us, India, China, Europe, we're all just collateral to these policies that are coming out that seem to have no linkage between them whatsoever.
Ravindra Sachdev, do you think that this is not playing out in any particular set fashion from the way it's playing out? Because to some, this seems like we're reshaping global geopolitics, energy security becoming the front line of US-China rivalry rather than trade or technology.
I mean, I would actually lean, yes, I mean, there's a lot of chaos and uncertainty, but if you were to take a long picture, I think it is playing to a game. I mean, if they're able to colonize or, have Venezuela, then for the next 100 years or whatever, America is sitting on world's largest oil reserves. It may, decide to pump when or not, at what prices, etc. But America will control the world's oil, reserves. One. The long game, right? Even Greenland, I look at it from that part, a long game. Yeah, it's going to create ruptures among the NATO and all, but if you have to look 100 years hence or 50 years hence, America will be a greater pan-America, and including Greenland, whatsoever it be. That's what Trump is looking at. Couple of things here. Yeah, sure. Donald's, I think as Bagaji said, his perhaps sweet spot where he wants oil is at around $50 a barrel. Okay. And that, yes, plays to the fact that he wants oil prices low in the US because he realizes tariffs are pushing up consumer prices. And one way to counter that or to mitigate that is to have lower transportation costs, of which, diesel is one component. So he would like very much oil to be at $50. Now, how much, and that's part of the reason, by the way, the oil companies are very reluctant. They say we'll have to, in Venezuela, invest so much, apart from even the regulations and the legal scenarios and the security, okay, and maybe some claims which are pending. The whole thing is how much would they need to invest in the infrastructure, which is, decaying, and how much would they be able to pump out and then sell at what price? If they're looking at Trump's end goal of $50 a barrel, etc., maybe they're not finding that comfort margin.
Yes.
But aside from this, I want to share one more overall big picture. Keep aside the oil, and the $50 point. Trump is coming down very strangely and very interestingly on some key markets within the US. He has just 2 days ago said that credit card companies should not be able to extract more than 10% of tax. That's a huge one. Interest rates, right? More than 10% of credit cards. There's a huge shock to the credit cards system. Similarly,
yes,
in the housing sector, he's saying that now large investors cannot be or will not be allowed to own single-family homes. That is also a huge shock.
Yes.
And thirdly, he's been talking to the defense industry and saying that you're not doing enough work, like especially I think he singled out Raytheon or Northrop Grumman, that you should not buy back you should not give dividends to your share or buy back your own stocks, but you should invest more into ramping up your production capacity, and the CEOs should not have such huge packages.
Yes.
No, that's a very strange thing to look at, in defense, real estate, housing, and in fintech. He's taking on which would be typically considered the bastions of capitalism and whom have funded his campaign.
So like you said, this is baffling, and it is baffling for the markets as well, which means that volatility is likely to stay. As far as this debate question is concerned, for China, this discounted oil that we are talking about perhaps is no longer guaranteed. And for countries like India, even without direct exposure to Iranian or Venezuelan crude, that risk comes through prices. It comes through competition for supply and perhaps a higher geopolitical risk because there are the unknowns out there. The geopolitical risk premium is baked into energy costs, and that is an important piece. But the takeaway is that the headlines may talk about the protests, the sanctions, the strong words, the rhetoric is very high. But underneath, this is about control over energy, influence over supply chains, and the next phase of great power rivalry playing out through oil. My thanks to our panelists joining us, Ajay Bagga, Sukrit Vijayakar. Thank you very much, Richard Harris. It's great to have you all with us on the show. Rubinder Sachdev, such a pleasure connecting with you and getting your insights, and we hope to have more scintillating discussions like this in times to come here on NDTV Profit. Many thanks. And with that, it's going to be a wrap on this edition of The Big Question. I'm Vikram Oza from me and the team. Thank you so much for joining us. And of course, the big questions will keep rising. We'll keep seeking the answers. Good evening.